Wow, this is just crazy. If you've been watching the stock market at all in 2026, you absolutely cannot ignore what's happening with advanced micro devices, or AMD. We're looking at a stock price explosion that has completely dominated the financial headlines. So you're probably asking, what does this actually mean for our stock accounts? Are we looking at a generational opportunity here, or is this just a massive trap? Well, to answer that, we have to bypass the flashy headlines and isolate the three real causes hidden behind this price action. First, there's an unprecedented acceleration in global AI infrastructure demand, literally shifting from isolated data centers to entire national sovereign grids. Second, AMD is demonstrating massive operating margin expansion, which proves their pricing power. And third, their highly integrated CPU, GPU, and software ecosystem is capturing structural market share. Now, for those of you unfamiliar with their business model, think of AMD like the chief architect of a rapidly growing digital megacity. They aren't out there pouring the concrete themselves. Instead, they design the incredibly complex high-speed highways and power grids, the chips, that allow massive amounts of data to travel and be processed instantly.
Okay, let's dive into this. OMG, 147% year-to-date stock surge? Really? Why on earth is the market going wild like this? Well, when a stock climbs that steeply and a company's valuation expands this aggressively, it immediately raises a red flag for any rational data analyst. We simply cannot rely on market sentiment or hype. We must look strictly at the financial statements and the underlying business fundamentals to understand if this represents sustainable structural growth or if it's merely a temporary liquidity-driven spike.
So, what I just said basically means we need to figure out if this is just an AI bubble or if it's genuinely backed by fundamentals. Precisely. To determine that, we're going to dive deep into their Q1 2026 financial data to examine their revenue quality. Then, we'll evaluate their industry environment and competitive economic moat against their peers. And finally, we'll model out 3 strict survival and valuation scenarios based purely on the numbers. If you look at the data right here, you'll see a massive 38% year-over-year jump in total revenue. AMD brought in $10.3 billion in the first quarter of 2026, compared to $7.4 billion in Q1 of 2025. This establishes the baseline that the stock surge is rooted in undeniable top-line growth. However, top-line revenue growth is basically meaningless if a company is just burning capital to acquire it. We have to measure the profitability and cash flow metrics to assess the true health of the business. This table details their operating efficiency. Looking at the non-GAAP metrics, gross margins expanded to 55%. Crucially, operating income surged by 43% to $2.5 billion, which actually outpaces that 38% revenue growth. It's proven by the numbers that there is tremendous leverage in AMD's operating model. They're scaling their sales much faster than their operating expenses, and that translates directly to a massive 45% jump in net income, landing at nearly $2.3 billion. Wow. So they aren't just selling more, they're actually making way more profit on every single chip. Exactly. Now, what's really interesting about this slide is exactly where that revenue is coming from. The data center segment is now the undeniable primary engine of the company, generating $5.8 billion. Compare that directly to the client and gaming segment at $3.6 billion and embedded at $873 million. Historically, AMD relied super heavily on the highly cyclical PC and gaming console markets, but the data proves a structural business transformation has occurred. High-margin enterprise data centers are now the core driver of their cash flow. That specific data center segment skyrocketed by 57% year over year, and this increase isn't an anomaly. It's driven by 2 specific compounding factors: the sustained demand for their EPYC processors in traditional server infrastructure, and the rapid, continued ramp-up of their Instinct GPU shipments, which are highly purpose-built for enterprise AI workloads. As AMD's chair and CEO, Dr. Lisa Su, pointed out, inferencing and agentic AI are actively driving this increasing demand for high-performance CPUs and accelerators. The industry is shifting from simply training large models to deploying agentic AI, which requires constant, real-time computational reasoning. Now that sounds a bit too complicated, right? Could we give a simple analogy? Think of it this way. Traditional AI is like a student quietly memorizing a textbook. Agentic AI is like that same student actively taking a timed exam, reasoning through complex problems, and writing essays in real time. That active reasoning requires continuous, high-speed processing power, which shifts the industry's computational bottleneck directly into AMD's primary domain.
And we see this computational bottleneck being addressed aggressively in real-world infrastructure deployments. For instance, Meta has initiated plans to deploy up to 6 gigawatts of AMD GPUs. For little context, 6 gigawatts equates to the power consumption of several major cities. It's massive.
Furthermore, major cloud providers like AWS, Google Cloud, and Microsoft Azure are expanding their EPYC-powered instances, while AMD has also locked in a collaboration with Samsung for next-generation HBM4 memory. These are concrete, multi-year, multi-billion-dollar infrastructure commitments. But wait, £2 billion? That's massive. What does this mean for their global footprint? Well, it signifies a major transition from corporate contracts to sovereign AI infrastructure. AMD committed up to £2 billion to accelerate AI innovation in the United Kingdom over 5 years. Governments globally are waking up and realizing that domestic AI processing power is a matter of strict national security and economic viability. AMD is systematically positioning itself as the foundational hardware partner for these sovereign nation-state initiatives. And this brilliantly illustrates how the deployment of these funds is highly strategic. It includes the Zenith AI supercomputer for scientific research, the Sunrise Fusion AI system for the UK Atomic Energy Authority, and an incredibly cool partnership with Oriole Networks to pioneer advanced photonic networking, literally using light to transmit data to eliminate latency. So what all this basically means is they're locking in their tech for the next decade of national scientific research.
Section 1. The moat. Let's look at AMD's competitive edge.
In the highly competitive semiconductor landscape, a company must possess an irreplaceable weapon. AMD's moat is their integrated architecture. While some competitors dominate the standalone GPU market, AMD built a multi-pronged portfolio consisting of EPYC CPUs, Instinct GPUs, and their open-source ROCm software stack. By optimizing the entire data path across memory, network, CPU, and GPU natively, AMD can resolve hardware bottlenecks that standard standalone competitor solutions fundamentally struggle with.
Furthermore, it's proven by the numbers that they have a distinct hardware advantage in memory capacity. AMD's MI45X GPU features an insane 432 gigabytes of high-bandwidth memory per processor. If you look at the data here, a major competitor's next-generation NVL72 maxes out around 288 gigabytes. That is a strict 50% capacity advantage for AMD. In deploying massive language models where memory bandwidth is the ultimate limiting factor, this technical specification acts as a critical differentiator to capture market share. Section 2. Valuation and future outlook. Okay, let's move to and see how this builds. They're making excellent money, their tech is locked in globally, so why is the stock priced with such an astronomical premium? Is it actually safe to invest here?
Well, that brings us to our forecast scenarios, driven by their current trailing price-to-earnings ratio of 170x. Paying 170 times past earnings prices in absolute uninterrupted perfection. For our bear case, the trigger is if severe manufacturing bottlenecks occur with their foundry partners, or if their ROCm software optimization fails to scale against entrenched competitors. The feasibility of this risk is absolutely non-zero given supply chain complexities. If those risks materialize, this 170x multiple will compress violently, leading to a steep sell-off that heavily punishes late investors.
Conversely, we must look at the forward data. The base case trigger assumes AMD successfully executes their current meta deployments and UK sovereign buildouts. Based on these locked-in contracts, analysts project a massive 77% jump in earnings per share this year alone. This execution drops the forward PE to a much more palatable 74x, supported by $8.6 billion in free cash flow. Now, the bull case trigger requires AMD to not only meet these base targets, but to aggressively take further market share in the highly profitable AI inference space. Given their 50% memory capacity advantage, this is highly feasible and would make today's astronomical price look entirely justified in retrospect.
So it leaves us with this final thought. At what point does a massive premium perfectly match a massive trajectory? As the legendary investor Benjamin Graham said, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. Right now, the market is voting enthusiastically for AMD, but the long-term weight of their expanding revenue just might catch up to the hype. Thank you for watching today's Explainer. Your subscriptions, likes, and supportive comments are a huge encouragement for our production. Keep analyzing the data, and we'll see you in the next one.